PPI figures seconds away. We're going to bring it to you now. Okay. Oh dear. Expect a red day. Expect a red day. 0.4. PPI is up 0.4, expected 0.3, core 0.3. Core has fallen. That's the most important. 0.2. It's a mixed bag. We're going to bring it to you now. PPI, inflation, in initial jobless figures, 225,000 forecast, 242 actual numbers. So the jobless claims has gone up. Economy is hot. This could be a volatile day. We'll bring you more information in the coming moments. Here we go.
Squawk Box, Rick Santelli here. Miami HQ. Breaking news. The wholesale cousin to yesterday's consumer price index, the November read for the producer price index. Expected up 0.2, double that, up 0.4, up 0.4. That equals June. To find a higher, you have to go all the way back to April.
We might not get a rate cut now in December.
Food and energy, as expected, up 0.2. That's 1/10 lighter than the 0.3 in the rear view mirror. If we strip out food, energy, and trade, it's up 1. That's 1/10 light and 0.2 under where we were last month. Up 1/10 equals September. To find a lower number, you're going all the way back to unchanged in May of 23. Yes, May of 23. Now, let's take a step back and do year over year. Not very good news here.
No.
3% on
This
headline
is what we warned of yesterday.
year over year. That's a big jump. We're expecting 2.6, rear view mirror 2.4. 3%. We're going to be going, 3%. You have to go all the way back to February of 23 to find a higher number, and that was all the way up at 4.7. Now, if we look at year over year ex food and energy, that's 3.4. Also hotter than expected. 0.3 hotter than the rear view mirror. 3.4 to find a higher number.
There goes the market. This is what we said yesterday.
February of 23.
Hope you didn't buy it.
Now, the last one, year over year ex food, ex energy, ex trade, up 3.5. Exactly in the rear view mirror, and the rear view mirror 3.5 back to back. Well, that means we are looking at the highest back-to-back levels since February and March of 23, when it was 4.5 and 3.7. Let's look at initial claims. 242,000. That's a heck of a jump.
Yep.
We're expecting 220-ish. Rear view mirror 225. 242 would be the highest since
expect a red day, and it is
October of this year. On continuing claims, 1,886,000, the 26th consecutive week above 1.8 million. And if we look at the number of 1.9 million, the last time we were there would have been November of 21. A few weeks back, we did have a few of those 1.9s, but they were revised out. After all of that, and once again, warmer than expected, the metrics with PPI. Over a month, we're a little light, so your course going to get the analyzing crowd. You know, they're going to annualize this and come up with a lower rate. But after everything we did, we're at 429 and a 10, Joe. Before the numbers, that was up 2 basis points. We're basically at 428 plus right now. And if you look at what was going on overseas, yesterday, Bank of Canada cut. This morning, Swiss National Bank cut 50. They're down to only 50 now, 0.5%. The ECB... Eastern also cut a quarter as expected, down to 3%. At 1 Eastern, we have the last of 119 billion in Treasury coupon supply in the form of 22 billion 30-year bonds. And as I said, the inflation was warmer yesterday. Today, markets seem to ignore it, but they didn't ignore it all day after yesterday's spectacular 10-year note auction, which should have pushed yields down. What did they do? They zoom. You can only squeeze this inflation for so many hours before it seems to pop out in higher rates at some point. Today is the 4th consecutive session. 10-year note yields have traded higher than its previous day's high yield. It's a lot of info there. Sorry about that. You know, you got to give it all to the viewers. Joe, back to you.
Very, very good. Yeah, so like we said yesterday, there was no surprise. I said live on the show, please do not chase the CPI. Wait till tomorrow. And I said yesterday morning, it was popping up. It was not good news. The market was trying to push it up, the Santa rally, which we still believe is in place. However, it was going up yesterday. I said, don't chase it. It will sell off. It didn't do it straight away. It started to do it last night live on the show. I said, okay, it's starting to go now. And now it's begun. Okay, expect volatility on the markets today. It has sold off. So if you bought yesterday, I warned against it. Do not buy. This is not over. Inflation is not done with. And we've got massive figures today. So the market is going to trim off from yesterday. So if you bought yesterday at the top going up, then you're going to be out of the money now. For me, I am still way up. I'm waiting for the drops now to buy. There does not need to be any buying yet. The Santa rally won't continue and won't kick off now until another couple of days. Remember, it's the 5 days, last trading days and the first 2 days of January. So we've got a little bit of time to go into that. We need a correction, pull back before we go again. But this is a bit of a concern. You shouldn't be buying right now. A lot of the big tech will sell off today. As you can see, it's going down very, very quickly. This is exactly as predicted. This is great. And also you can see defensive Coca-Cola going up. Coca-Cola was oversold. People are now going to buy Coca-Cola. It's a shame because I would like to have bought more in just a few more days, but it's going to go up now because, which is great. I mean, if it goes up, I win. If it goes down, I win. I always win anyway, but the point is, if it goes up today, that's great, but I would have liked to have bought more, and it probably will. J&J will probably go up today. Our defenses will go up today. People will take profit from tech, and they'll buy at the dip. Crypto will suffer a bit as well today, but there goes the market. Down she goes. So get ready to buy more, but wait. Have patience, and patience. We're not going to buy anything for at least an hour or two, but I've got $61,000 ready to go, ready to buy, but I'm not going to buy yet. Finger on the button.